Hey guys, Mike here. So, oh boy, there it is. I want to tell you, I'm telling you, oversold rally, right? There it is. We got a pop. I can't believe it. We rallied. Whether or not it continues, we'll see. But yes, when you get oversold, when your RSI is in the toilet, there's going to be a pop at some point in time, and all of a sudden, news will turn bullish all of a sudden. I don't believe it. Where did it come from? And so what happened? Nike comes out. You would think they just hung the moon with the earnings call, right? Massive. Okay, and so we're going to go into that one. FedEx, we just had more earnings report. Some of them are abysmal. Nike's definitely at the top of the list as far as being the best one out of the group I saw. And maybe even Cintas, believe it or not, which we're going to talk about that too, because what that means for this recession coming up in 2023, which is big. So we got a lot to talk about on that. And then really more importantly, on top of that, to tie into it is, like, what you're going to start hearing on these earnings calls. I'm going to tell you, we're going to start, we've kind of already got in there, but we're really going to accelerate this phase of what's good for the stock market is terrible for the economy. All right, that's what we're going to start getting into, and that's going to tie into FedEx and some others. But you can see all of the indexes. There you go. Finally see some green, right? Been a while. Again, ain't no surprise. I don't know anybody's surprised by this. I don't know anybody be surprised, but that should continue, for God's sakes. But that's what it is. I mean, except if, Tesla, of course. Tesla ended up setting a new 52-week low at some point in time today, which is a really bad sign when everything else is going up and yours is still going down. But again, we had Nike and FedEx report yesterday after hours, and so that drove the after hours market up. Then that came into the day, and then all of a sudden consumer confidence went up, and hey, we're bullish on the economy now all of a sudden, which is interesting. Then you had Carnival. They ended up reporting this morning, and so did Micron and Cintas, which is the uniform company, right? So you can tell, like, oh, what's going on with that? Kind of tell us what we think, what they see ahead, and I think it's going to really surprise you, right? I think it's going to really surprise you. But remember, here's what you need to understand. We talked about this before. Where's the bar on earnings? Here it is, right? Was up here, 2021, 2022, whatever. Came down to here, and then probably maybe in June, on the floor, right? And so what have you seen going into fourth quarter, or like third quarter, and now going into, we're starting to report in fourth quarter coming up in January and stuff. The bar is really low, guys. Right? You had these massive sell-offs in the first quarter, second quarter, third quarter, right? And so here's Nike. Nike comes along. Hey, revenue growth, great, right? They had some good stuff. Top, bottom line. Inventories are abysmal, by the way, like $7.4 billion. They already said they're going to start discounting that stuff. So that's not a good thing for them. It's kind of like a Lululemon problem, but Lululemon got destroyed when they reported their stuff. But, Nike, on the other hand, and it said, hey, China's reopening. They have a huge exposure in China. And the other thing, this is something that you got to watch out for, because analysts are they're not even accounting this. I swear, they're so far off the boat on this that, like they said, what was hurting all these international companies all year long? A strong dollar. When they were trying to convert all that revenue, all that money into U.S. dollars, it was hurting them. Well, now all of a sudden Nike said, no. This year's going to be much better because the dollar has weakened. Right? And so, and if it even just stays where we're at, you're going to see a nice percentage increase to those bottom lines just off that alone. And so that's something you got to, take into consideration. And if the dollar continues to weaken, then that's going to help Apple and Microsoft and Google, all the big boys who make up the biggest weight in the S&P, right? And so that's something you got to take into consideration. Then you get into FedEx. Why did FedEx pop? As I told the members, it's because they said one thing. We're going to be cutting out about another $1 billion in costs next year. Okay? Remember what I just said there. We're going to be cutting out another $1 billion. They already made a bunch of cuts to begin with, right? And they hit top line, missed bottom line, I believe it was. They missed revenues, basically. And, the guidance isn't good. The revenues are slowing down. It didn't have much good to say about the global economy as a whole and their business and stuff. So we know that really wasn't a big shock, right? Then I want to show you this one. This one just came out before I started recording this. Hadn't got on the call yet. But when I looked at it, I'm going to read this to you, and you let me know where you think this stock will actually be, because by the time you see this, you'll know. Here's Micron, right? So this is a semiconductor, and here we got revenue of $4.09 billion versus $6.64 billion for the prior quarter, and $7.69 billion for the same period last year. Well, that looks good. We're moving up, baby. GAAP net loss $195 million, non-GAAP net loss $39 million, operating cash flow $943 million. That sounds good. Wait a minute. Versus $3.78 billion for the prior quarter and $3.94 billion for the same period last year. And then the key phrase on what they had to say here is right at the bottom. We expect improving customer inventories to enable higher revenue in the physical second half. Second half. That would be 2023. And to deliver strong profitability once we get past this downturn. And that stock was flat when that got reported. Really? Because that right there would have been crushed about 5 months ago. But now, man, no big deal, baby. We're going to 2023. New year, we're up. Here's another one for you. Carnival Cruise Lines goes up 5% after reporting an incredible quarter. Oh, no, they didn't. Did they report a incredible quarter? No, they did not. Okay. Q4 earnings top, revenue misses estimates, and obviously they cut costs, but the fuel costs and food costs actually crushed them. Shocker there. And if you want to see a company that has a lot of debt, go check out Carnival. It'll make you choke when you're reading. I mean, it is unbelievable how much debt this company has. But hey, they say we're still booking trips and stuff, so I guess, you know, they're ready to rock and roll for 2023. I guess we still ain't got it out of our system yet. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And I mean, cruise stocks, airline stocks were popping. It was kind of funny. I think if I remember right, Airbnb and another travel stock was down. But hey, if you're in the airline business, like the Delta CEO said, business is good. So I guess we're still traveling, right? And what it means is they're able to charge us so much for these trips, business is good, right? That's what's going on. Less people might be traveling, but they charge us so much for it, they're able to make up for it. And so we just don't know any better. So we just running the credit cards up. Get it, right? And so that's what's happening. But understand, the other one I was going to talk about real quick was Cintas. This is the one that really surprised me, but I was really looking forward to it. And it's a uniform company, right? So I heard a lot of people say, if there's going to be a recession in 2023, it's going to be a white-collar recession, not a blue-collar recession. And I'm like, and listening to Cintas, guess what they did? Beat top and bottom line and raise their guidance for 2023. So that ought to tell you something. I don't think they're raising their guidance because obviously being uniform, most of the stuff they do is blue collar. Yeah, they're like, yeah, we're doing this, baby. And I'm like, oh, okay. And I talked to my neighbor who's, you know, superintendent over big commercial projects and stuff like that. And he said, yeah, I think this is going to be a white collar recession if we have one at all. And that's what you've seen, right? Big tech, everybody just laying off, right? The white collar workers, but blue collar so much, I ain't really seen it. And that kind of leads me into this right here, which is, you know, what you're hearing, what you're going to see happening right now in these earnings calls is a lot of cost cutting, right? You've seen the big boys do it and all that good stuff. And what does that mean? That's good for the market though. Stocks pop whenever they lay people off, cut their hours, take their benefits away, because that's the biggest cost for a company. You know, cut down any cost. The stocks usually pop because it's good for the market. Ask yourself, is that good for the economy though? Is it good for the economy when you see a bunch of layoffs and hours get cut, and when the companies say, you know what? Yeah, we're not expanding anymore. All those other, we're going to do this, we're going to do that. We're cutting that out. Not only are we not expanding, we're contracting right now. We're just trying to get through this because they maybe see a recession. They don't know if it's going to happen, but they're not worried about that. What they're worried about is keeping the stock price up. That's the number one thing, okay? You got to understand that. And so you might say, oh my God, I've been laying people off. I don't understand. The stock is popping, right? Bad for the economy, though, okay? But, you know, we have a supposedly hot employment system, so there's plenty of people, you know, plenty of jobs out there they can go get when they get laid off, I guess. But understand, it's this kind of like this, I guess you can think of like tree roots in a way. It just spreads, right? So you got the major companies, the big ones, come out there and say, well, you know what, we're going to do layoffs, cut hours. We don't need to buy as much. We're going to cut back on what we're getting from the vendors. You know, any expenses we can do. Expansion, forget about it. We're not building new buildings or warehouses or leasing this or leasing that. None of that stuff, right? Then what happens? That trickles out to all of those thousands and thousands of vendors and suppliers that are smaller companies that are feeding into the bigger companies, and they go, uh-oh, well, this ain't good. They're cutting how much out of the ordering? Oh, my goodness. So what they got to do? Jimmy, got to let you go, buddy, or I got to at least cut you back to 30 hours. Well, that's not good, right? And then, of course, then they don't need as much material, so then they tell their vendors and suppliers, well, we don't need as much. Okay. And then, of course, it starts trickling down. Then all of a sudden, it finally, at some point in time, which hasn't got there yet, gets to us, where we're going, well, you start turning on the news, and you're like, well, there's a lot of layoffs going on. And you start talking to your neighbor, and they say, yeah, man, I got my hours cut back 30 hours, blah, 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 and this is why. And you start looking around, you start to go, honey, do we need to go to Cancun in 2 weeks? You sure? I mean, Jimmy just got laid off. The news is saying this. I mean, my company's talking about tightening the purse strings. I don't know about this, right? And then this fear sets in, and people start spending less. So we're not nowhere near that point because people are still spending, All right, you look in the comments, people tell you all over the country, all over the world, still spending. Listen to Carnival Cruise Lines, listen to the airlines. They're like, yep, people still traveling, still going. That's the way it is, you know. And so, I mean, my mom just traveled down here to see us, right? So there you go, and she paid to do it. So actually, I paid for it, but you know, that's the way it works, and that's what you're seeing. And I think in the earnings calls, it's going to be interesting to see if the analysts are just so far off, because that's the whole big bet, right? That Q1 is going to be a disaster, and we're going to see this huge drop. And when you start seeing these earnings, like you're seeing these earnings right here roll in, you're kind of going, I don't think they're great earnings, don't get me wrong. But you guys are starting to set the bar so low that if they don't come in that low, the stocks go up, right? Because analysts have no idea what they're doing. That's basically, I mean, they've proven that the whole year. I mean, they didn't even do any downgrades the first and second quarter when everything was falling off a cliff. You know, they waited later on, and then sometimes what they do, they, you know, go, oh my God, we got to make up for that and throw them under the bus, right? But then they don't hit those numbers that come in above, and they go, well, wait a minute. They beat revenues, even though it's way down from the previous quarter. You can see the revenue's doing this, right? Which is not a good thing, okay? But that's where we're at. And so, again, I told you, what did Mike Wilson at Morgan Stanley say? He said, we screwed up the forecast. We thought there was going to be a recession in the fourth quarter of 2022. Obviously not, right? It's not coming in the first quarter either. We're going to hit the first quarter right now, right? They're saying, okay, now it's going to probably be this end of the second quarter, right? In the second quarter, maybe third. And so pushing it down the block, which, of course, leads to this slow bleed out. Right? What's happening? That's why stocks keep bouncing back. Are we good? I don't know. Now China's opening up. Whoa, wait a minute. You know, and so many of these big companies have, you know, exposure to China. And I mean, look, you know how I feel about China. I don't need to keep talking about them. But, you know, there must be something going on, right? So we got to watch out for that. But the other thing is, and this is why I'm creating a watch list in TradView right now, where it's just, I got like 5 stocks. I'm going to watch them. And if they don't go down, the market don't go down. We don't get this huge sell-off. There's just, because it's almost mathematically impossible to get it, right? And what is that? Look at this right here. This is what I'm talking about. I need Apple, which look at the percentage. These are percentages, guys. That these guys are actually weighted in the S&P. In order to get this big fall, everybody keeps talking about. Look at Apple, almost 7%. Microsoft, almost 6%, right? Those two alone account for almost 13% of the S&P. And yet the Apple, if I remember correctly, is only down like 28%. I think Microsoft's down like maybe 30%. But then when you look at Amazon setting new 52-week lows. Tesla, new 52-week lows. Google, new 52-week lows. United Healthcare, new 52-week highs. Johnson & Johnson, not sure about. ExxonMobil has been setting new 52-week highs along with Chevron. But when you look at all the other big and large cap tech stocks, they've already been just crushed. Don't mean they can't go no farther, but they've gone down so much that they really can't drag that S&P down that huge percentage you need at this point in time, right? Like, especially all the other smaller companies. And so what I'm looking at, I'm going to watch and look at, you know, Apple, Microsoft, Chevron, Exxon, and I'll pick another energy company. And why am I picking those? Because energy is just, it's totally taken itself and diverged away from oil prices and just keeps going up, right? And there's a lot of big boys saying, oh, keep buying it for 2023, right? And so this happens. This has happened before, right? I did a members video showing them this. This has happened before, right? And so I'm going to do one more energy company in there because I don't see healthcare falling off a cliff. I just don't, because this is where they go to if they think there's going to be a recession. You go to healthcare because guess what? Don't matter what's going on in the economy. You get sick, you got to go to the hospital. You got to have surgery, you got to have surgery, all that stuff. So you got to have medicine, got to have medicine. It is what it is, right? And so guess what? That's the insurance companies, hospitals, all the stuff, healthcare. And that's where a lot of people are going and keep telling people to go. So for me, those 5 stocks I pick, if they don't go down, because they'll have made up, almost 20% of the S&P by itself, probably maybe 6 stocks. If they don't go down a lot, not just a little bit, I mean a lot, you're not going to get the big drop. Anyway, that was longer than I thought it was going to be, but that's where we're at. That's what I'm doing. Let me know in the comments what you're doing, what you think and stuff. And I'll end up seeing you guys tomorrow, and we'll see, hey, do we get another green day?